update of the gold market, U.S. gold market. I'm Rich Paz in Critical Point. It is August 10th, 8:58 a.m. Eastern Time. You're looking at a monthly chart of gold futures. And last week, I not only updated subscribers and then put out some free video and audio, but I also wrote a column that is probably specialized. In other words, a select group of people that are professionals as well as retail or market enthusiasts, but I think I'm quite popular and well watched in it. And at any rate, I put out that gold's in jeopardy here of launching a long-term bear market. That doesn't necessarily mean a lot of downside in gold. It may be more sideways range trade for years, but what it does suggest is it should be difficult, and perhaps I should say that we won't see a record high price in gold for the next 5 to 7 years if it triggers this signal. Well, I know more than said that, and they started selling gold. They had already started off a little fluctuation like a level 3 model trend, but they seemed to sell quite a bit right after I put all that information out there. And they continued to sell into this week, and they actually put the futures down to near the March low. Now, a few moments ago, I updated the stock market audio update this morning, the morning brief, and I said it did violate it. And the weird thing is, I don't know what I was looking at, but my charts don't show that. And they were showing that it had violated that low, and I thought, oh my gosh, we've got a long-term bearish signal in the futures. But now, as I look at our data, it's not showing up in our spreadsheets, our modeling. It's not showing up on the quote screen. It's not showing up on these charts. But it did stab close to that March low, and then they bought it quickly. Well, personally, I think they sold too hard too fast, but I also think they're rebounding too hard too fast. I think it needs to go lower still and test this week's low again. And if it were to violate the March low, in other words, go to a new low for the year, and that low is 1,673.30, that is a long-term bearish signal. Now, we could argue, since this is a continuous chart, we could argue for some time, I guess, which is the best continuous chart. But I'll also take a look at a variety of individual charts and may find the signal is there. But what's more important is the actual cash gold, in my opinion. The futures appear to be leading cash gold lower, and so they're more emotional. At any rate, what does it really mean if it takes out the March low? Well, it would take out what I believe to be a minor long-term bottom. And I just realized these are not labeled correctly here. This should be this, okay? And we'll just put this up here for now. And what you want to think of, this was a bull market, minor bull market, and it came down into bear market, and it should now rally into late 2022 on into maybe mid 2023, and then have another such bear market. But here's the key. It's also possible that it can put in a major long-term top as of last year, and it's down for several years, meaning this minor long-term bull market isn't going to work. Something's going to break it, okay? It's going to break down, all right? But it's also possible that this LT1 top can be delayed out into the same time of that LT3 top. So this market can be bullish still into late 2022 to sometime 2023, but that's probably going to be the latest for that more important top. I would then be bearish at least for a few years, like 3 to 5 years, instead of being bearish for like 5 to 7 years. And again, when I'm saying bearish this time around, I'm not convinced it means an outright bear market, because there's probably super cycles that are bullish into next decade for commodities, including gold, and there can be record highs next decade. But we may see a surge of inflation near the end of this decade as we go into peak economy and a major peak in the stock market, okay? And so we could get a late surge in gold, some kind of bull market later this decade. But it does imply that if we get this violation this year, we ought to consider gold really won't rally all that well in the next few years, and it may have a real struggle. It may be a trading range with a somewhat lower bias, and we do have potential objectives of 1,500 down to just below 1,200 in gold near term and over the next few years if it gives us this signal. Okay, so for the moment we don't have it in the futures, we don't have it in the GLD gold fund that I'm using as cash gold, but I can see that cash gold fund with two gaps lower here in the last few days. I think it's a very weak sign. You could argue two gaps, however, is also a sign of exhaustion, and maybe it's going to rebound, but I'm a little concerned it's breakdown, it's a sign of weakness. So I think this little bounce here isn't going to last, and I think it's probably going lower in coming weeks, and we just have to watch the low of this year for both cash and futures for gold, okay? That we can get that kind of a down move. And to swing over without any model labeling, this is the monthly chart of that GLD gold fund. And again, it has to take this low out. And I just believe I want to be a long-term bear in gold after that. Now, what does all of this mean? Why is gold doing this when we're supposed to have higher inflation? I believe gold thinks interest rates can move high enough so that we don't have the weakness in relative interest rates enough to make them that bullish gold, that they feel like interest rates are taking away from that inflation story. I think they also believe that inflation won't be aggressively higher the next several years. This is not the 1970s, that this is more like 1950s, 1960s, or what I'm now saying is something in between the 1950s, 1960s, and 1970s, meaning I'm willing to allow a little more, but I just not allowing the 1970s. I just don't see it. So I think that what they feel is, yes, inflation could be transitory, and I think they just feel like it can slow down. It's not going to be that aggressive, but it's going to stay. And that's why I think the downside is limited in gold, because inflation will stay, and I don't think interest rates are going to scream higher, but higher the swing up we've seen over the past year is going to stay. That's not going to be fully retraced until near the end of this decade when we have a recession. So gold has complications here where people really aren't that interested in hedging with gold. It's not going to work that well hedging for inflation, in my opinion. And maybe Bitcoin is stealing some of that, but I don't think so. I think the gold market is kind of like the bond market, where they just don't see this scary inflation story. I think that's what's really going on here. Now, what would cause me to change my mind about this? Well, if it takes out the March low but then goes to a record high, I would have to change my mind. I would say we missed something, a minor long-term bottom came in later than we thought, and I just got to get back on board with the bulls, okay? But if it takes out like recent highs, recent monthly or weekly highs, that's not enough to give up on the bear story if it does go to a new low for the year first. And I would just be concerned it's range trade and will not make a record high and eventually will go lower. So that's my gold story. And by the way, for subscribers, I'm going to release an update on the super cycles for the stock market and economy after 20 years of fretting over what scenario, what year are we going to call it, and does it even mean anything these days? Or is it going to be a 1929 crash? Well, I've made a breakthrough as of yesterday, and I've decided to get off the fence. Don't keep working on it. Just go with that forecast until proven wrong, and that won't be for probably another 10 years. But if you're not a subscriber, sign up. You'll want to see that. I'm not going to give it away for free. It'll be a long time maybe before I do that. But check that out as well. Anyways, that's my gold scenario here, and I guess until this GLD gold fund trades back above 170, 140, I'm going to give it a chance to violate the March low. I'm going to give it a chance that this market's actually long-term bearish. Past results are not necessarily indicative of future results. Thank you.